If the United States ever stopped paying its debt, the world wouldn't collapse overnight. It would unravel quietly, methodically, until the illusion holding everything together simply disappeared. Banks would freeze, markets would vanish, the dollar, once the symbol of global strength, would become just ink on paper. Because what we call US debt isn't just a number, it's the backbone of the global economy, the invisible system that supports your mortgage, your salary, and even the price of your daily bread. If that system ever failed, it wouldn't just shake America, it would shake the world. But to understand the danger, we have to go back to the beginning. The story starts in 1790. A new nation, born from revolution, drowning in war debt. Most countries in that position would have defaulted, but America didn't. Instead, Alexander Hamilton made a bold move. He embraced the debt. He argued that trust, not gold, not silver, would be the foundation of the new economy. If America could borrow money and always pay it back, it would earn faith. And faith, he said, is the most valuable currency of all. It worked. Investors poured in. The US became the world's most reliable borrower. Debt became the engine of American growth, financing railroads, wars, industries, and dreams. Then came 1944. In the middle of World War II, world leaders met in Bretton Woods to design a new economic order. Their choice changed history. The US dollar became the anchor of global finance, backed by gold and powered by trust. From that day on, America's debt became the world's savings account. But that trust had limits. In 1971, after years of war spending and inflation, President Nixon cut the dollar's link to gold. Money became pure belief, paper backed by promises. From then on, the world didn't trade in gold. It traded in confidence. And as long as that confidence held, America could borrow endlessly. Debt stopped being a weakness. It became a product. Every bond, every loan, every investment depended on one idea, that the United States would always pay. But what happens when belief starts to fade? Today, that question is no longer theoretical. US debt has passed $38 trillion. The government is borrowing money to pay the interest on money it already borrowed. Political fights over the debt ceiling have turned into global anxiety events. And nations like China, India, and Brazil are slowly building systems that don't rely on the dollar, because faith, once shaken, never returns the same. If America ever missed a single payment even by mistake, the shock would be instant. Banks would stop lending, markets would seize. Central banks holding trillions in US bonds would scramble to escape the storm. Within hours, the risk-free asset of the world would no longer be risk-free. Confidence would vanish, and with it value. Because money only works when people believe in it. The truth is simple but terrifying. The world doesn't run on cash, it runs on trust. And once that trust breaks, no government, no central bank, no policy can ever bring it back. America built its empire on a paradox, infinite debt, backed by infinite faith. And so far that faith still holds. But every crisis, every political standoff, every near default chips away at it, piece by piece. Empires don't fall in explosions. They fade in disbelief. And if belief is the only thing keeping the system alive, then the end won't come with a crash. It will come with a shrug.